Hi everyone, welcome back to the cannabis series. We're looking in detail at a company called Glasshouse at the moment. Interactive Brokers is the broker that I'm going to use if I want to access this particular company. There's a link in the description for that. Now, I'm not going to reinvent the wheel here because I think Aaron Edelhart at Mindset Capital has summed these next few sections that I wanted to cover. I think he summed them up far better than me. So I'm going to go through some of his work and discuss that. So first I want to talk about the financing of this business. Now just remember, cannabis prices are about as low as they've been. So there is not a lot of money being made in the cannabis industry right now. So the big question is, how does Glasshouse go from 20% capacity of their greenhouse, to utilizing the rest of it so they can reach this bigger scale? So at the moment, they're losing money, but in this tough environment, yet they need to spend money, maybe $50, $100 million to build out the rest of this greenhouse. How are they going to do it when there's no capital markets available to them? It's illegal federally, so banks aren't going to loan to them anytime soon. What are they going to do? Well, they're still going to have to borrow money from somewhere. And it's going to be expensive because the cannabis industry pays these really high rates, like credit card kind of style rates, because banks aren't willing to work with them. And it's still federally illegal, like I said. But because they have hard assets in this greenhouse, some lenders are going to be totally okay with lending against the hard asset because they could always get that hard, like a mortgage on a house or something like that. So there's collateral that they can use, which is great. And they're going to have to use that. It looks like they're going to have to borrow at potentially 20% rates, and they might have to dilute shareholders, even though Aaron thinks it's highly unlikely, because they should be able to get the funding through just borrowing money. Because at 20%, you might be thinking, why is this a good business? If you have to borrow money at 20%, that is a terrible idea. You have to be doing so much better than 20% to warrant that use of money, right? Well, that's exactly right. So they might spend, say, $10 million unlocking the next section of their greenhouse. They predict that that's going to generate, unlocking that next piece of their greenhouse is going to unlock, say, $25 to $30 million of EBITDA, right? So earnings before tax and depreciation and things like that. Almost profit. If you're having to spend $10 million and you're going to make in the first year 25 to 30, well, if you have to pay 20% on that 10 million, let's say you have to spend 12 million or 14 million and you're going to make 25 in the first year, well, that is still something that you're going to do, because that return on invested capital is going to be pushing 200%. Now that's exciting, and that's why I still feel like Glasshouse is a very interesting investment, because the amount of money that they can unlock with the next section of this greenhouse, all you have to do is get prices to be reasonable and not fall off a cliff. And that's where the risk is here in this investment. So let's go through what could go wrong. There's lots of things that could go wrong. In California, the cannabis pricing just never recovers. That could make this thing not work. In California, the regulatory environment just crushed the industry. They get harsher, not start opening up, but they are starting to open up. So it would be quite a turnaround for them to now go backwards, but it's possible. So there's obviously the mismanagement of the rollout of this next section of the greenhouse, but they've already unlocked some of it already. So I could imagine that they should be able to do the next piece just like they did the first piece. So that's still a risk though, management issues there. Now it's important to understand those risks because they're real risks to this investment. You have to try to work out what do you think the likelihood of those events are. And that's going to be the key to an investment like this. But there are some catalysts on the other side of this too. So you've got regulations around safe banking, for example. Safe banking is the acronym for the banking regulations in America at the moment. You can't essentially bank with banks if you're in the cannabis industry. So being able to access banks and have lower financing rates and things like that would be quite a step change for the industry. And that's looking more and more likely as time goes on. We've got any sort of relief from California or federal with the legalities of cannabis as a whole. You've got things like interstate commerce potentially opening up. Like I've said in a previous video, California is fully legal. Oregon next door, fully legal, but they can't move cannabis between the two, even though they're both legal. It's because it's illegal to move the good between states, but both those states, it's legal. It's really messy, I understand, but if common sense prevails and interstate commerce can open up, that opens up a bigger market for obviously someone like Glasshouse as well. And then the big one is just supply coming out of the market, which is already seen to be happening, where it was at 83 million square feet of cultivating capacity in the California. It's now down to about 60, and that is still looking like it's going to decline. So competition is coming out of the market from a supply side with all the subscale farmers. Glasshouse will be able to produce, and with prices stabilizing and increasing, they should be able to make more money. Turning then to insider ownership for this particular business, the C-suite owns about 15% from what I can see. I think it might be far higher than that through other holding companies, but they clearly have skin in the game here, so there's no issues. The largest shareholder is the founder and CEO. I'm in the process of doing my due diligence on these numbers that I'm going to show you here in Evaluation. This is courtesy of Aaron doing this work, so please don't take this as complete factual knowledge. I need to fact check all of this, but it gives you an idea on what is possible here in the space and why we should get interested in this particular company. Okay, I'll let you look at the numbers here on the screen, but this is Aaron's work on what he calls the break-even scenario. And we've got a sale price of cannabis being at 350. That is very low, but that's what at the end of 2022, that's what the numbers were. So we've got the cultivation costs, the tax, the gross profit, the operating expenses. So therefore, there was a loss in 2022. Now then, Aaron's gone and made some adjustments here and got the shares outstanding number. And essentially, this is what the scenario is at the moment. And it doesn't look great because they're making an operating income loss. Look, this could continue. This is where the investment would break down as if things stayed the same. But I want to argue that things aren't going to stay the same. So let's look at what Aaron calls a bear case scenario. So we've got the number of dry pounds of biomass produced at 750,000. Remember, full capacity of this greenhouse is 1.5 million. So this would be only about 50% capacity. This is essentially the next section that they want to unlock would look a little bit like this. If the sale price was to stay about the same, they would be making around about 23 million in a year with the increase of capacity. Once you do the add backs and you make sure you put in the stock dilution that might happen from raising the money, which Aaron has included here, which is good to see. He's calculated a target stock price of $7.13 to be exact. This is the bear case. Say we're looking, I'm going to guess we're going to look about 2 years out here. And that's probably the bear case scenario. That would be pretty poor, that a lot of the thesis wouldn't be working. We still get a target stock price of $7. Then we look at a more base case scenario here. We've got the number of dry pounds of biomass produced at 1 million. Remember, it's still 1.5 million we could get to. Now, the sale price is going back to more stable levels where essentially the thesis is playing out not perfectly, but it has, normalized at least. So we've got a sale price a bit more reasonable. They're going to be making then closer to 300 million a year with more shares outstanding here, more dilution because they're going to be growing out further this business. And we got a target stock price now at $32. That's a fair change from the $7 we saw earlier. Let's look at now a bull case scenario where they do get to the 1.5 million dry pounds of biomass getting produced. That would and a sale price maybe a little bit above what we were saying earlier, but not too crazy. 777 is probably somewhere in the middle. We've had prices well in this range before. It could easily be 1,000, but Aaron's saying, okay, a bit of a bull case scenario here. 777 would be the price per pound. They're making now over 700 million a year in operating income. They don't need to dilute as much as we thought. We're getting a target stock price now of about $90 a share. This is starting to get pretty interesting, as you can say, quite optimistic, and they were going to reach their goals is what this case is saying. Aaron's gone ahead and said, okay, let's say some of the catalysts actually come through and interstate commerce does start to open up. It doesn't mean it's federally legal yet across all the states, but you can move your product around the different states now. So that would mean that places like New Jersey and certain northeastern states, they sell cannabis at thousands of dollars per pound, whereas California's at $3.90 or something like that. So there's big differences. So let's say it all normalizes down to around about across the entire country down to around about $1,000 a pound. I think that's a little bit bullish, but that's what a super bull case is supposed to do. I think 750 was probably a good number as we did in the previous case, but let's imagine that we get to $1,000 in sale price on average. They increase the size of the biomass that they can produce from the 1.5 million dry pounds that they were hoping to get, but they can actually expand even further. They do have room to grow out even further if they wanted to, like more land around them. And yeah, I'm not going to really look at this one too much. Shares outstanding number increasing still. We have a target stock price of $250 a share. That's, not far off. What's that, a 50 bagger or so, probably from the current stock prices. So look, that's a super bull case. I don't even want to entertain that too much at the moment. That's only in probably 3 to 5 years time. That's insane. I like the base case. I think that is pretty good. I think that feels more likely than not. And I think they could get there in sort of 2, potentially 3 years. And this feels really comfortable to me. I would give this a likelihood of well over 50% chance of happening, and the other cases sort of diminishing percentage outcomes from there. So the base case would be where I'm focusing. Now, I still have a fair bit of work to do on this one. I haven't dug into the management team yet. I haven't got a feel for their integrity and all the soft skills that I really like about culture and things like that at Glasshouse. So I've got a bit more work to do still on this one, but I think a company that has piqued my interest, especially from the management side of things, and I have done the work on, is a company called Grown Rogue. Now, Grown Rogue is next door in Oregon, and that's the company I'm going to be looking at in the next episode. And this one is really interesting. I think I like this one the most out of all the cannabis companies. So stay tuned for that. In the next video, I'll dive into that one for you, and I hope you're enjoying this little mini series on cannabis, and I will see you in that video.